Lesson 12. Leverage. The most important subject of FX markets is the leverage and expresses the ability to open a position with a low margin. We explored the lot sizes in the previous lesson. Those define the position size that we want to open. Of course, you will need to lower the margin by using leverage. Leverage is defined while opening an account that varies across broker firms, but we have to take into account that while leverage may increase the profit, it also increases the potential loss risk. Hence, please do not forget the higher the leverage we use, the more risk we take. The leverage in our demo account is 1 to 400, so the examples we will show here will use leverage of 1 to 400. We touched on lot sizes in the previous lesson. Now let's relate this lesson with lot subject. Let's rebuild our first example on USDJPY pairs. We explained that one lot was 100 units, mini lot was 10 units, and micro lot was 1,000 units. Now we will open a position of one micro lot. Because the leverage is 400, we will use 1 to 400 of the specified lot size, which is equal to $2.5 as margin. To explain this, we choose the related pair. Type 0.01 lot in the lot field and open the position by clicking on buy. We can see from the terminal window that our equity falls by $2.5. We open a position of $1,000 just by using $2.5 margin. We close up the position to make a new example. Let's take the mostly traded pair, euros US dollars, as an example. One lot means a position with 100,000 euros in size. Because the leverage is 400, we will use 1 to 400 of the lot size, which amounts to 250 euros. In the previous example, we opened a buy position. Now let's open a sell position. The direction of the position does not matter in terms of margin. Our equity falls by 250 euros, but you see 305.23. Please do not get surprised as the system changed the margin used into our predefined account currency. Our account currency is US dollars, so the system converted 250 euros to US dollars. As we opened the position, the euro-US dollar pair price was 1.22091, and 1.22091 times 250 equals to 305.23, which is the same amount we displayed in the terminal window. Let's close the position and give an example about commodities. Before we move on, we want to clarify an important issue. The leverage defined in your account is the maximum leverage we can use. But in some investment products, the leverage may be lower than our chosen leverage. In some commodities, stocks, or cryptocurrencies, their own max leverages may be lower than our leverage. Let's give an example about this. We will now use an ounce of gold. The maximum leverage offered in an ounce of gold is 1 to 200. Let's make a calculation according to this. So one lot in ounces of gold has 100 units of gold. This means that if we open a position of one lot of gold, we'll be using an amount of 100 times $1,899.51 US dollars. Because our leverage is 200, we need a margin level of 1 to 200, which is $949.91. Let's open a position and see what happens. As you see, we open a position of 100 ounces and our equity fill by only a margin of $949 US dollars. As we mentioned before, employing leverage to generate greater return on assets, but excessive losses are also possible from highly leveraged positions. Hence, we should not invest all of our money in the position. Leverage is not a tool that would make us rich. Please do not trust in people who say otherwise. Now let's skip these and try to understand the basics of leveraging. Let's assume that you have 150,000 US dollars and want to buy gold as you think that price will go up. Let's think that the price of gold is $1,500. You can buy only 100 ounces of gold without leverage. Then you will have no money left in cash after you make this gold investment. Let's again assume that you open an FX account with that 150,000 US dollars. To make this gold investment, you will only use 750 US dollars of cash, not your whole 150,000 US dollars. As you see, you have still 150,000 minus 750 equals to 149,250 US dollars of cash. The main aspect of leverage is this issue. You make the same investment of 150,000 US dollars of gold with only by using 750 US dollars. Now, if another investment opportunity you have enough money to invest in, you can either invest in 1,000 US dollars of oil or 2,000 US dollars of DAX 30 index with the remaining 149,250. If you've invested in gold without leverage, you would have no money left aside and miss out on these opportunities. The leverage is definitely this. Now let's move to the next lesson.